Breaking news, August 24, 2025. Iraqi dinar stability confirmed as central bank reserves back currency. Amid today's exchange market moves, the Central Bank of Iraq, CBI, today reaffirmed its iron grip over the foreign exchange market, confirming the official exchange rate of the Iraqi dinar at 1,320 IQD per US dollar. This comes at a time of global economic uncertainty, fluctuating oil revenues, and local speculation surrounding the Iraqi currency. The statement by Dr. Mazom Mohammed Saleh, the financial advisor to Prime Minister Mohammed Shia al-Sudani, underscores the depth of Iraq's foreign reserves and their role in stabilizing the dinar in domestic and international markets. This announcement was met with immediate attention from currency traders, investors, and international observers. For many Iraqis, it is not just a confirmation of numbers, but an assurance that their national currency remains strong, reliable, and firmly backed by Iraq's wealth and reserves. Key confirmation: the dinar at 1,320. Dr. Mazom Saleh clarified that the Central Bank of Iraq enjoys substantial foreign currency reserves that exceed global benchmarks by a wide margin. The official rate of 1,320 IQD per USD is not only fixed but actively defended by monetary policy tools, electronic remittance oversight, and foreign reserve deployment. In Baghdad's Kifa and Harithia exchanges, traders noted that the parallel market, where the dollar often sells above the official rate, was largely subdued today, with cash sales hovering between 1,335 and 1,340 dinars per dollar. This represents one of the narrowest gaps between official and market rates in over a year, a sign that the CBI's dollar auction system, compliance reforms, and reserve-backed interventions are working effectively. The market trusts that the dinar is stable because the reserves are real, not speculative, said Ahmed Hussein, a Baghdad-based currency dealer. When the CBI says the rate is 1,320, we know it can hold it. Iraq's exceptional reserves, a global standard surpassed. Saleh's statement focused on Iraq's foreign reserves, describing them as the main pillar supporting the dinar. In global finance, central banks are expected to maintain reserves capable of covering 3 months of imports. Iraq, however, stands in a unique position, with reserves strong enough to cover 12 months of trade needs. This is a critical statistic. It means that even if Iraq's oil exports temporarily decline or global prices fall, the country can still meet foreign currency demand for imports, everything from food and medicine to industrial equipment, for an entire year without disruption. Iraq's oil exports temporarily decline or global prices fall, the country can still meet foreign currency demand for imports, everything from food and medicine to industrial equipment, for an entire year without disruption. In financial terms, Iraq has a buffer zone that places it among the top stable reserve countries in the Middle East, said international economist Rana al-Khalidi. This is what makes the Iraqi dinar less vulnerable to speculative attacks. The reserves are diversified across major currencies, including the US dollar, euro, Chinese yuan, and gold holdings, all managed according to international banking standards. This diversification reduces Iraq's dependence on any single foreign partner and insulates the dinar from sudden shocks, balancing oil revenues and the currency. Oil remains the cornerstone of Iraq's economy, accounting for over 90% of government revenues. Saleh acknowledged that fluctuations in global oil prices can pressure Iraq's balance of payments. However, Iraq's large reserves, accumulated during years of high oil prices, give the CBI the ability to smooth out volatility. Currently, oil prices have seen mild contraction in global markets, but the reserves ensure that Iraq is not forced into sudden currency devaluations or emergency financing. Instead, the dinar remains fixed at its official rate, with inflation under control. Saleh noted that inflation in Iraq is below 3% annually, a remarkable achievement in a region where double-digit inflation has been common in recent years. This is largely due to the dinar's stability and the central bank's ability to meet all legitimate foreign currency requests for trade and imports. Market reactions. from Baghdad to Basra, across Iraq's major cities. The confirmation of the exchange rate rippled quickly through the financial community. Baghdad, Kefir and Harithia markets dollar sales today were steady, with traders reporting that customers expressed renewed confidence in holding dinars. Several exchange houses saw increased dinar deposits as citizens shifted back from hoarding dollars. Erbil, Kurdistan region traders reported similar rates, with a 1,335 to 1,340 spread. The Kurdistan markets, often more sensitive to external remittances, showed alignment with Baghdad's stability. Basra, oil hub importers welcomed the news, noting that predictable exchange rates reduce costs in shipping contracts, particularly for machinery and spare parts. A Basra shipping company manager told Al Furat News, "When the dinar is stable, our contracts are stable. We can plan ahead. This means lower risk premiums and cheaper goods for Iraqis." Dinar confidence versus dollarization. One of the central bank's ongoing battles has been the reduction of dollarization in Iraq's economy. For years, many Iraqis preferred to save and transact in dollars due to fears of sudden dinar devaluation. However, with strong reserves and consistent interventions, the CBI is slowly reversing. Inflation under control, below 3%. Saleh emphasized that Iraq's annual inflation is below 3%, falling within the natural range of price changes. This is significant because inflation erodes purchasing power and undermines public trust in the currency. By controlling the foreign exchange market and defending the official rate, the CBI indirectly keeps inflation in check. Prices of essential imports such as wheat, rice, cooking oil, and medicines remain steady, because traders can rely on stable dollar-to-dinar conversions. In contrast, neighboring economies facing currency depreciation often struggle with inflation above 10 to 20%. Iraq's success in maintaining a low rate highlights the effectiveness of its monetary policy. Expert opinions. Financial analysts weighed in after the announcement. Ali al-Mashadani, Baghdad-based economist. Today's confirmation shows Iraq is on a path toward monetary maturity. The reserves are a shield, and the official rate is not an illusion. It is backed by real assets. Nadia Karim, financial journalist. What we are seeing is a new phase in the dinar story. Stability is no longer just a promise. It's a reality being proven in markets daily. International banker, Dubai-based investors will take notice of this. Iraq's reserves and inflation control are stronger than many emerging economies. The dinar is no longer viewed as fragile. The bigger picture, what this means for the future. The confirmation of today's rate at 1,320 IQD USD is more than a daily update. It represents a strategic stance by Iraq. It means 1. Reserves as the backbone. Iraq's financial power is not in speculation, but in tangible reserves, giving it exceptional defense capacity. 2. Stable ground for reforms. A steady currency allows the government to implement economic reforms without fear of sudden shocks. 3. Investor attraction. With stability and low inflation, Iraq can attract more investment in infrastructure, banking, and technology. 4. Reduced dependency on cash dollars. The slow but steady de-dollarization process strengthens the dinar's sovereignty. Conclusion. Today's exchange, tomorrow's confidence. As of today, Sunday, August 24, 2025, the Central Bank of Iraq has once again demonstrated its capability to maintain monetary stability. The dinar remains firmly fixed at 1,320 per dollar, backed by some of the strongest reserves in the region and supported by inflation control, trade coverage, and international credibility. For Iraqis on the street, this means their salaries, savings, and business contracts remain safe. For traders, it means predictable pricing. And for the global financial community, it signals that Iraq is emerging from decades of instability into a new era where the dinar is no longer a weak currency but a stable one, rooted in real reserves and credible policy. The story of today's exchange market is not just about numbers. It is about confidence, sovereignty, and the future of Iraq's economy.